Trump's big, beautiful bill, how does it impact student loans? What died, what survived, and what did they add? I'm here with Joshua Cohen, the student loan lawyer, and bankruptcy attorney. He's really a consumer advocate. Josh, thanks for everything you do for consumers around student loans, debt. Let's unpack Trump's big, beautiful bill.
Okay, thanks for having me.
Yeah.
So, three categories: what died, what survived, and what was created. Let's talk about what died. Um, for those income-driven repayment plans, there are four that we're aware of. There's income-based repayment, IBR, income contingent, ICR, pay as you earn, pay, um, and save. Save is dead, not because of the bill, but because of a lawsuit that predates it. So save,
Okay.
dead.
Okay.
What the bill does is it's going to sunset two of those. Pay and ICR will sunset as of July 2028. If
2028.
you
So
are
two.
in those plans, you will be funneled into the survivor income-based repayment.
Okay.
Income-based repayment survives, the forgiveness survives, any credit that you have towards forgiveness survives. Great.
So let's
So,
let's explain what income-based repayment is for those that don't understand. Share with
okay.
them.
So any payment based on income is called IDR, income driven repayment. And the sole survivor is IBR, income based repayment. In plain English, it is a payment based on your income, your gross income, and family size.
Hmm. Okay.
So,
So
yeah,
so when you have an income-based repayment, they're going to look at your income and your family size, and that'll adjust the student loan payment you have, and and it can go from X to as low as zero.
as low as zero. And I love the people who say, what about the interest?
Hmm.
It's a red herring. You're going to get forgiveness. If you could afford to pay the interest, you wouldn't be on an income plan.
So what you're saying is if I mean, why would someone not apply for an income-based repayment plan if you could lower? I mean, everyone should do that just to lower the payment, right? I mean, what am I?
For most people, it's the thing they have to do. I mean, you look at your wallet. Your wallet is the one that dictates what you can pay. If you can afford to pay off the loan, then yeah, that might make sense for you. But
Okay.
for the majority of people, yeah, income driven is the savior.
Okay, got it. Okay, so that's going to survive. You know,
Yep.
what else has died? What else has survived?
So those payment plans died. IBR survived.
Hmm.
What was created is a new income driven repayment plan called RAP,
Hmm.
Repayment Assistance Program. It's not out yet. It should be out early 2026. And the difference here, there are some key differences. Number one, the minimum payment is $10 a month, not zero.
Okay.
So your Social Security recipients, they got to shell out $10 a month for no reason.
Okay.
Fine. Um, the formula is different. I won't get technical. They still look at family size,
Hmm.
but only based on your taxes and people that you claim as dependents. So
Okay.
for non-custodial parents, as an example, if you don't claim that kid as a dependent, you don't get that deduction in your payment plan.
Okay.
That's a subtle difference.
Okay.
But here are some more important differences, which you, I think, will enjoy, and other
Okay.
people will as well. When you're on an income plan, it doesn't matter what your payment is, interest always accrues. And traditionally with IDR, we have what we call negative amortization.
Okay.
Okay, when your head stops spinning, what that means is your payment doesn't even cover interest.
Hmm. Right.
Who would allow this? Well, we
Yeah.
allow it because that's the only way to make it affordable. It means you could pay 100 a month, but you're accruing 200 a month in interest.
Right.
Your loan is growing by 100 a month.
Hmm.
Well, under RAP, that doesn't happen. With RAP, any interest that you don't pay with your payment is waived.
Huh.
That means your loan does not grow with RAP, but it
That's
gets
a
better.
win.
It gets even better. This is
Yeah.
progressive.
Yeah.
Considering who did it, this is very
Yeah.
progressive.
Yeah. Right.
Also, if you don't pay at least $50 a month in principal, the government will kick in $50 to lower your principal by $50 a month, $600 a year.
Wow.
Wow. Now, other differences.
Uh-huh.
With the income-based repayment that survives, you get forgiveness in 25 years.
Uh-huh.
With RAP, it's 30 years.
Uh-huh.
So you'll have to run the numbers. Which way does it make sense? But
So you can
RAP,
go either way, income based or wrap.
yes,
Got it. And is
yes.
wrap available now?
It will not be available until we hope early 2026. It
Oh.
must be available by July, but it will be coming very soon.
And what does wrap stand for?
Repayment Assistance Program.
Okay, got it. Ultimately, starting next year, you're gonna have two options. And it's timely because all the payments have started already with regard to student loans. They were on
Yes,
deferment or hiatus or whatever they were. And
yes,
Trump has said, no, everyone's paying, right?
yes.
Now, if they don't pay and it goes into default, there's something I learned recently is that, there's many non-garnishment states, but that doesn't apply for student loans, meaning
Doesn't
with
apply at
student
all.
loans, like anyone can take money out of
So
your paycheck.
for federal loans, because it's federal law, it supersedes state law. If you have a federal debt, even taxes, they have the right to garnish your paycheck by simply sending you a 30-day warning letter.
Mhm.
Okay. Now they must leave you with 30 times the minimum wage.
Mm,
Anything above that they can touch, which means for most people, they can take 15% of your paycheck.
there you go.
That's huge.
Yeah. That
They can
15%, like
also
that's a monster amount. And that's 15% of the gross.
15% after your taxes, and I believe after healthcare. But
Okay,
that's
after your
they'll
taxes and after healthcare. Okay, got it.
but they'll touch everything else. They can
Yeah.
also take 15% of Social Security.
Yeah.
Imagine living on disability and losing 15% because of your loan.
So much for being uncollectible. It's not the case with student loans.
And it gets worse.
Yeah.
So right now, we're waiting for the new year. Well, what happens after January? Everyone starts getting ready for their taxes and getting a
Yeah.
refund?
Right.
No. If you owe federal student loans and you're in default, they will take your refund.
Oh my God, dude, that's going to impact so many people.
So get out of
Yeah.
default, or better
Yeah.
yet, don't default. Get into an income plan. Ta-da.
Yeah. I mean, there really is there's no reason if you cannot afford, like if you're on Social Security or you're on like minimum wage and you
Yep.
have student loans, there's no reason to default because a income-based repayment can take it down to $0 or $10.
Yes. Yes.
Wow, I never really, okay, that's good to know. That's really good to know. Thank you for that, Josh. One last question. With the big beautiful bill, does that impact how student loans could be discharged in bankruptcy? Because that's something new that started a few years ago. And
Right.
did that ruin that at all, or is that still possible?
So the bill doesn't touch anything about dischargeability in bankruptcy. Doesn't
Okay.
touch it at all.
Yeah. Okay, good. We're gonna do another video on that because many people think bankruptcies or student loans cannot be discharged or wiped away. That's not the case. So
It's
thank you
not
for
the case.
Josh. Josh, thanks for the insight on the big, beautiful bill. Josh Cohen, student loan lawyer.
Thank you.